Hello dear students, in this video we are going to see ledger posting. Problem of ledger posting. We are continue with the same problem which we have completed in the journal posting or journal entry. That journal entry we are going to transfer into the ledger posting. Ledger is nothing but the groups of account. In this stage we classify the accounts which we have recorded in the journal. This is the journal entry. Okay. From these transactions, we can easily say that in first cash is coming in means this is the capital introduced by the owner. Okay. In this bank and cash means cash is going out means cash is deposited into the bank. Purchase as Snehal here person name is given means this transaction is on the credit basis. Purchase of the goods on credit. Mayas and sale means sale is goods are going out of the business means this is the sale of the goods on credit basis because person name is mentioned. Furniture and cash here purchase of furniture in cash. Cash to sale means this is the transaction of cash. Sale of the goods on cash. Carriage to cash paid the carriage in cash. Cash to commission. Here commission is recorded on the credit side. Okay. We record the income and gain on credit side means this is the receive the commission. Okay. Transaction. Insurance to cash account. Insurance is expenses as we record the expenses on debit side as per the nominal account rule. This is the paid insurance transaction. Cash to Maya means here cash is coming from the Maya on the credit sale. Okay. These are the all transactions of the journal entry. This journal entry we are going to record in the ledger. Ledger format is in the T shape. You can see here debit side, credit side. On debit side date, particular journal folio amount. Also on credit side date, particular journal folio and amount. First step of recording the ledger posting is first we are going to prepare the cash account ledger. Okay. First of all we have to record debit and credit entry. On debit side, we record the transactions in which cash account entry is on the debit side. Okay. On 1st January, cash account entry was on debit side. That date credit account we record on the debit side of the cash ledger. See, you can see here. 1st January to Geeta's capital 50,000. Then second date in which the cash account entry on debit side is 19th January. On 19th January, cash account entry is on the debit side. That date, credit account we record on the debit side. 19th January to sales account 2000. Then 25th January, again there is a cash account entry on the debit side. That date, credit account we record on the debit side. That is 25th January to commission account 25. 31st January, cash account entry is on the debit side. That date, credit account we record on the debit side. 31st January to Maya's account 2000. Likewise, we cover the debit side entries. Now we are going to record the credit side entry. See, 7th January, here cash account entry is on the credit side means we record that date transactions on credit side. But which account we record? We record the debit account. You can see here 7th January by bank account 25,000. Next 15th January cash account entry is on the credit side. That date debit account we record on the credit side of the ledger. That is 15th January by furniture account 3,000. 20th January here again cash account entry is on the credit side. That date debit account we record on the credit side. That is 20th January by carriage account rupees 50. 20th January here cash account entry is on the credit side. That date debit account we record on the credit side of the cash ledger. That is on 20th January by insurance account 200. Likewise we completed our debit and credit entry. Now next step of ledger posting is we have to find out the total of debit as well as credit. We total debit and credit accounts separately. Okay. Total of the debit side is 54,025. Okay. Total of the debit side is 54,025. And total of the credit side is, total of the credit side is 28,250. Okay, means credit side total is less than the debit side total. Credit side total is less than the debit side total. How much? The difference between the debit side and credit side. Now we have to balance both the sides. For that purpose, we have to add the balancing figure. Debit side is 54,025. Credit side is 28,250. Means to balance both the sides, we need to add balancing amount on credit side, because credit side is less than the debit side. That's why we write down the end date of that month. End date of the January is 31st January. We write by balance carry down 25,775. Okay. After adding this balancing amount, we will get both the sides equal. That is 54,025, 54,025. Okay. As debit side is more than the credit side, that balancing amount we call it as a debit balance. Remember, as debit side is more than the credit side, that's why we have to add balancing amount on the credit side. That amount we call it as a debit balance. Okay. This is the closing balance of cash ledger on 31st January. That balance we carry down for the next month as the opening balance, that we write down on the opposite side. That is 1st February to balance brought down 25,775. This is the cash ledger. Clear? Now we are going to prepare the next account. Next account is to Geeta's capital account in next slide. See, Geeta's capital account. Geeta's capital account entry is on which side? Credit side. Means we record that date transactions on credit side. Okay. But which account we record? We record the opposite account, means debit account of that date. 1st January by cash account 50,000. Then there is no any date in which there is a Geeta's capital account, neither on debit side or credit side. That's why there is only credit entry 1st January by cash account 50,000. To balance both the sides, debit and credit, we need to add the balancing amount. Okay. We record the last date of that month to balance the Geeta's capital account, or to close the Geeta's capital account. 31st January to balance carry down 50,000. So that there will be the equal total of debit as well as credit, 50,000 and 50,000. This is the closing balance of Geeta's capital account, and then opening balance for the next month, that is February, is 1st February by balance brought down 50,000. This is a Geeta's capital account. Next account we are going to prepare the bank account. See, bank account. Here bank account entry is on debit side. Means we record that date transactions on debit side. Okay. But which account we record? We record the credit account. See, 7th January to cash account 25,000. There is no another entry of the bank account. So we close that bank account by entering the 31st January by balance carry down 25,000. Then both the sides are equal, 25,000, 25,000. This is the closing balance of bank account on 31st January. Opening balance for the 1st February will be by balance brought down 25,000. This is the bank account ledger. Now next account is purchase account. Cash account already we prepare. Now next is purchase account. Purchase account entry is on the debit side. Means we record the 9th day transactions on debit side. Okay, but which account we record? We record the credit account. 9th January to Snehal account 5,000. There is no any account seen other than 9th January. So we balance both the sides. 31st January by balance carry down 5,000. Now both the sides are equal, 5,000, 5,000. This is the closing balance of purchase account on 31st January. That will be the opening balance for the 1st February. We write down that as by balance brought down 5,000. This is a purchase account ledger. Next we prepare the Snehal account. Okay. Snehal account entry is only on 9th January. But 9th January on 9th January Snehal account is entered on the recorded on the credit side, means we record that transactions on credit side, but recording the debit account, that is 9 January by purchase account 5,000. To balance both the sides, we write down debit side 31st January to balance carry down 5,000. Now both the sides are equal, 5,000, 5,000. This is the closing balance of NAL account on 31st January. That will be the opening balance for the next month, 1st February, by balance brought down 5,000. This is the Snehal account ledger. Now we are going to prepare the Maya's account. See, Maya's account we see on 11th January as well as on 31st January. We consider both the dates. First of all, we are going to write down the 11th January. Okay. On 11th January, Maya account is recorded on debit side, means that date transactions we record on the debit side. But we record opposite account, means to sales account. 11th January to sales account 3,000. Okay. Again, there on 31st, there is my account entry, but that entry is on the credit side, means 31st date transactions we record on the credit side, because my account is on the credit side. But we record the opposite account, means by cash account. 31st January by cash account 2,000. Here debit side is 3,000, credit side is 2,000, means 1,000 less credit side than the debit side. Means to balance both the sides, we need to add the balancing amount on the credit side as end date of that month, that is 31st January, by balance carried out 1,000. Now both the sides are equal, 3,000 and 3,000. Okay, this is the closing balance for the Maya's account by balance carried down 1,000. That we will bring as opening balance for the next month, that is 1st February, by balance brought down 1,000. This is Maya's account ledger. Now we are going to prepare the sales account. Here also you can see sales account entry on 11th January as well as on 19th January. On 11th January there is a cash sale, and on 19th January we receive the cash for that sale. Okay, that's why there are two. You can see here two Maya's account, sorry, two sales account. Okay. See, on 11th January sales account entry is on the credit side, means that date transactions we record on the credit side. But which account we record? Debit account. See, 11th January to buy Maya's account 3,000. Then 19th January, again here sales account to sales account is credited. That's why that date credit account we record on the debit account, we record on the credit side. 19th January by cash account 2,000. There is no any sale account entry on the debit side. Okay, that's why to balance both the sides, credit side is 5,000. To balance the debit side, we need to add closing balance, balancing figure. Okay, 31st January to balance carry down 5,000. Now both the sides are equal, 5,000, 5,000. This is the closing balance of sales ledger on 31st January. Now opening balance for sales account is 1st February by balance brought down 5,000. This is the sales account ledger. Now furniture account. Furniture account, you can see here on 11th. Furniture account. On 15th, see, date is here 15. 15th January, furniture account entry is on the debit side. That's why we record that date transactions on debit side. But which account? We record the credit account of that date. 15th January to cash account 3,000. Okay, there is no any transaction account of furniture account. That's why to balance both the sides, 31st January by balance carried down 3,000. Both the sides are equal now, 3,000, 3,000. See, this is the closing balance of furniture account at the end date of that month, 31st January, by balance carried down 3,000. This will be the opening balance for the next month, 1st February, by balance brought down 3,000. Now carriage account. Carriage account 20th January. Carriage account is recorded on the debit side. That's why that date transactions we record on the debit side. But which account? Credit account we record. 20th January to cash account 50. And to balance both the sides, we need to add the balancing amount. That is 31st January by balance carried down 50. Now both the sides are equal, 50, 50. This is the closing balance of carriage account on 31st January. Then opening balance for 1st February by balance brought down 50. Commission account. Commission account again on 25th January. Commission account entry is on the credit side. That's why we record that on the credit side. But which account we record? Debit account we record on the credit side. 9 Jan commission account. Commission here date is 25th January. By cash account 25. And to balance both the sides, end date 31st January to balance carry down is rupees 25. Here date is 25. Okay. And opening balance 1st February by balance brought down rupees 25. Last account is insurance account. Okay. On 28th January, insurance account entry on the debit side. That's why we record that date transactions on debit side. But which account we record? Credit account. 28th January to cash account 200. And to balance both the sides 31st January by balance CD or carried out 200. Now both the sides are equal 200 200. This will be the closing balance of insurance account at the end date of that month, that is 31st January. Now opening balance for 1st February is by balance brought down 200. Okay, these are all the ledgers of this journal. Clear? Thank you.